Can you imagine a company that survives the American Civil War, the Great Depression, and 2 world wars? A true titan of finance, 158 years old, a name that was basically Wall Street itself. And then, poof. In the blink of an eye, it was just gone. This is the incredible story of how Lehman Brothers, a global financial powerhouse, vanished almost overnight. So to really get this, we've got to start at the end, the climax, September 15th, 2008, a day that didn't just start a chain reaction, it was the day the biggest domino of all was shoved right off the table. And look, this isn't some abstract financial news story, right? This is a human story. You can just feel the shock in this picture. Thousands of people carrying their entire careers, their lives, out in cardboard boxes. The news cameras were everywhere, but nobody, and I mean nobody, really knew what was coming next. It was absolute chaos. That's the day Lehman officially filed for bankruptcy. And the numbers, they're just mind-boggling. Over $613 times billion in debt. To put that in perspective, to this very day, it is still the largest bankruptcy in United States history. Nothing else even comes close. So the big question is, how on earth does this happen? How does a company that seemed so permanent, so too big to fail, just stop existing? To answer that, we need to go back. Way, way back. Okay, so let's set the stage. We're starting at the very beginning. And believe me, it's a world away from the Wall Street we think of today. We're talking about the Deep South, way back in the 19th century. The whole story kicks off with 3 brothers, Jewish immigrants from Germany. They land in Montgomery, Alabama, and start a little dry goods store. But they were smart. They figured out pretty quick that the real money wasn't in selling fabric. It was in trading cotton. And that was the pivot. They went from shopkeepers to major financial players, eventually moving to New York and literally helping to create the very markets that they would one day dominate. Now, we have to talk about a really difficult part of this origin story. It's something you just can't ignore. That early fortune, built on cotton, well, that business was completely tied up with the institution of slavery. In fact, U.S. Census records from 1860 show one of the founders, Mayor Lehman, as the owner of 7 enslaved people. It's a critical, foundational piece of their history. So, after the Civil War, the company pivots again. This is a huge shift. They move from just trading commodities to investment banking. What does that mean? Well, they're not just trading stuff anymore. They're actually financing the birth of modern American companies. Think about some of the most iconic stores from the 20th century. Sears, Woolworths, Macy's, names we all know, right? Well, Lehman Brothers was the bank behind the scenes that took them public, that gave them the cash to grow into the giants they became. So yeah, they were shaping America, even if you never saw their name on the building. And that influence, it just kept growing into this massive global scale. By the 2000s, at their absolute peak, they were the 4th largest investment bank in the entire country. They had 25,000 employees all over the world. They weren't just a big company, they were a pillar of the whole financial system. And this right here, this is what that power looked like. Their headquarters in Times Square, it's this gleaming tower that just screams strength, permanence. Kind of crazy to compare this to that first picture of employees with their boxes, right? This building was designed to look invincible. But, as we're about to see, the cracks were already forming inside. Yeah, that gleaming tower, turns out it was built on a really shaky foundation. And to understand the collapse, you have to understand one single massive bet the company made. A huge gamble on the U.S. housing market. The magic, or maybe tragic, word here is subprime mortgage. Now, Lehman didn't invent these things, but boy, did they jump in with both feet. They started buying up mortgage companies left and right, becoming one of the biggest players in the game. They were packaging up all these super risky loans given to people with, let's say, not so great credit. For a while, the profits were insane. But the risk? It was massive, and it was hidden. And if that wasn't risky enough, they poured gasoline on the fire with something called leverage. By 2008, it was just extreme. Here's a simple way to think about it. For every single dollar of their own money, Lehman was borrowing and investing $30. 30 to 1. Now, when things are going great, that makes you a genius. Your profits go through the roof. But if the value of your investments dips even a tiny bit, you're wiped out. There's no safety net. Zero. So you might be asking, how did they hide all this risk from everybody? Well, we found out later there was this, let's call it an accounting trick, called Repo 105. It's kind of slick in a bad way. Right before they had to show their books to the public each quarter, they temporarily move $50 billion of assets off their books. They'd call it a sale. But then, a few days later, they'd just buy it all back. The bottom line, it made the company look way, way healthier and less in debt than it actually was. It was, as a later report put it, materially misleading. Okay, so the stage is set for the final disastrous act. We're now back in 2008. The housing bubble is bursting. All those subprime mortgages are going bad, fast. And Lehman's giant gamble, it's blowing up in their face. And the speed of how this all went down, it's just breathtaking. Check this out. In late August, there's this little glimmer of hope. A Korean bank might buy them. The stock jumps up. But then barely 2 weeks later, the deal's off. And boom, confidence just vanishes. The stock completely craters, losing almost half its value in one day. The writing was on the wall. That brings us to this one single frantic weekend. The government is desperately trying to get another bank to buy Lehman. Bank of America takes a look and then walks away to buy Merrill Lynch instead. Ouch. Then Barclays from the UK steps up, but their government says no way, not unless the US government guarantees the deal. The US says no. And just like that, by Sunday night, every single option was gone. And this, right here, is the moment everything changes. See, just a few months before, another big bank, Bear Stearns, was about to fail, and the government stepped in and saved them. So everyone on Wall Street just assumed they'd do the same thing for Lehman. But they didn't. The government decided to draw a line in the sand. They said no more bailouts. Lehman Brothers was going to be allowed to fail.
And letting Lehman fail? Well, that wasn't like dropping a pebble in a pond. It was like dropping a mountain. It set off a financial tsunami that crashed over the entire world.
You know, the bankruptcy judge who oversaw the whole thing said it best. He called Lehman the only true icon to fall. And he was right. Its collapse became the symbol of the entire 2008 financial crisis. It was the moment the unthinkable became real.
And what happened next was fast and brutal. This 158-year-old giant was just carved up and sold for scrap. Barclays swooped in and grabbed the North American business for pennies on the dollar. A Japanese company, Nomura, bought up the pieces in Asia and Europe. A whole empire built over a century and a half was dismantled in just a few days.
The market reaction was, as you can probably guess, immediate panic. On that Monday, the Dow Jones dropped more than 500 points. Now, to put that in perspective, at the time, that was the biggest one-day drop since 9/11. That's when everyone realized, oh, this isn't just a Wall Street problem. This is about to become everybody's problem. So we're back where we started. A company that seemed like it would last forever, gone. It was really a perfect storm, right? Too much risk, shady accounting, and then a total collapse of confidence. Now, the fall of Lehman led to a ton of new rules and regulations, all designed to make sure something like this could never, ever happen again. But it leaves us with a really big question, and it's one we're still asking. Is the financial system we have today really any safer?